What's up, guys? This is Manoj Guptani. I welcome you all on behalf of the Edupedia world. It's a wonderful day outside, and definitely I hope that you guys are enjoying a day in the best of your health and spirit. So, guys, in my last presentation, we did discuss about the questions which have already been asked in the CA final examinations relating to the topic of mutual funds. By now, we have already covered the topics relating to basic SFM, bond valuation, and this is going to be the last presentation relating to the topic mutual funds. We'll be covering the remaining CA final examination questions which have already been asked in last attempts. So here's the first question for the day, and that is, this question was asked in CA final examination in November 2012. The information from Steady Mutual Fund Scheme. So an asset value at the beginning of the month is rupees 65.78. The annualized return is 15%. The distributions made in the nature of dividend income and capital gain amounts to rupees 0.50 and rupees 0.32. We are required to calculate the month-end NAV of mutual fund scheme. Also, we are supposed to provide a brief comment on the month-end NAV in such a case. So guys, before moving on to the solution, I would like to first discuss the question in detail so that you can get the complete clarity with the question first. So we have already been provided 15% annualized return in such a case. The asset value in the beginning of the year is available, that is 65.78. Also, the incomes which we have earned during the year in the form of dividend and capital gains is also present, that is 0.5 and 0.32. So we are supposed to find out the month and NAV in such a case. So what we can do, we'll simply have LHS as 15% return, and we'll be like we can take a month in NAV as X. In such a case, we'll be deducting 65.78, that is the month beginning NAV from that, and we can simply add the number of amount which has already been earned in the form of dividend income and capital gain income as its income. We'll be able to find out the exact month in NAV in such a case in a simple manner. So let's head to the solution now. So the return is equivalent to closing NAV minus beginning NAV plus all the forms of income which have been received by the investor during the particular period. In such a case, that would be dividend and capital gains. We'll be dividing whole of them from the beginning NAV that was available at the time of investing in the market. We'll be multiplying them with the overall number of months that is available on a calendar, that is 12, dividing them by the number of period for that matter which was investment was being done into 100. So here, by clearing that, we can simply get the perfect solution for it. Closing NAV minus 65.78 plus 0.32 plus 0.5 whole divided by 65.78, that was the beginning NAV, into 12 divided by the number of periods, that is 1 month, into 12 equivalents to annualized return, that was 15. So by solving that, you can easily get the closing NAV as rupees 65.78, which is exactly the same as the beginning NAV. Since the beginning NAV and the closing NAV are same, whatever was the appreciation in the mutual fund portfolio, the same has been distributed in the form of dividend and capital gains, that is 0.32 and 0.50. So what we can see, in this case, the mutual fund has not grown by even a single person. So the growth rate of that will be 0 in such a case, because whatever you are extracting from the market, you're easily distributing the same with the unit holder. So what's the kind of growth which you are making? That will be 0 if you are investing nothing in terms of growth perspective and distributing all of them without retaining any amount. So that is the case, guys. This question is the second question of this presentation. The same was asked in C final examination May 2010. So here goes the question. Based on the following information, determine the NAV of a regular income scheme on per unit basis. So following has been provided to us in terms of particulars and the amount in crores. Listed shares at cost ex dividend, that is 20 crores, cash in hand is 1.23 crores, bonds and debentures at cost, that is 4.3 crores. Of these, bonds which are not listed and quoted are amounts to rupees 1 crores. Other fixed interest securities at cost 4.5 crores, dividend accrued 0.8 crores, Amount payable on shares, that is 6.32 crores. Expenditure accrued, rupees 0.75 crores. Number of units of rupees 10 face value amounts to, like, number of units 20 lakhs. Current realizable value of fixed income securities of face value of rupees 100 amounts to 106.5 crores. And finally, the listed share which were purchased when the index was 1000, the present index is 2300. So guys, there is an increase in the amount of index. When we initially invested, that was at 1000 points, but now the index is at 2300 points. So there is some increment over that phase as well. So apart from that, value of the listed bonds and debentures at NAV date, which has been provided to us in the question, rupees 8, and plus there has been a diminution of 20% in the unlisted bonds and debentures. So we'll have to account for all these things in our question. So let's head to the solution. That will be, the listed shares would be 20 into 2300 divided by 1000. So when we invested our 20 lakh shares, that was at the index point of 1000. Now the same is at 2300 points. So we'll have that benefit as well. So our investment in such a case would amount to 46 crores now. So the cash in hand which is available with us, that amounts to rupees 1.23. That's the same which has been provided in the question. Listed bonds and debentures are also being provided in the question, that is 8 crores. Unlisted bonds after diminution of that 20%, right guys, that amounts to rupees 0.80 crores. Fixed income securities, which has been mentioned in the question as 4.5 lakh. So we'll be simply multiplying with the current rate which is available in the market, that is 106.5, and we'll be dividing with the face value, that is 100. So we'll get the exact market value of those fixed interest securities, and that would amount to rupees 4.7925 crores. Dividend accrued, which is our income, which is a kind of asset which will be provided to us from other companies. We'll be adding the same in our net asset portfolio. That will amount to 0.8 crores. Our total asset in such a case will amounts to rupees 61 crore 62 lakh and 25,000. So the amount payable of the shares, now we'll have to deduct all the liabilities which are supposed to be paid from the company's end. That includes the amount which is payable on shares, that is 6.32 crores, the expenditure accrued, that is 0.75 crore. So we'll be deducting these liabilities, which total amounts to 7.07 from the total number of assets, which amounts to 61.6225. So we'll get the overall net asset value in rupees in crores, that is 54.5525 crores, and we'll be dividing the same by the total number of outstanding units available in the market, that amounts to 20 lakh rupees. So the NAV per unit in such a case would amount to rupees 272.7625, and that's how this question can be easily resolved. So I guess you got the complete clarity as to how this question should be moved and progressed, and how the same is required to be presented while you are performing in your examination. Guys, remember one thing straight and clear. Examination presentation is one of the most important aspect which has to be taken care of while performing the examination paper. Any kind of error, any kind of mistake while presenting your paper can prove harm during your examination. So one has to ensure that one does present its paper in the best presentable manner he or she can. So one has to ensure that, and this tabular format is usually incorporated so as to ensure that you present your paper in the best manner. So keep those things in your mind. One has to give the best presentation in order to achieve the best number of marks. So let's move to our next question, which was asked in CA Final Examination May 2013. So herein, A has invested in 3 mutual fund schemes as per the following details. The same are given below. So mutual fund A, mutual fund B, mutual fund C. The date of investment is 1/12/2003, 1/1/2004, 1/3/2004. The amount of investment made in A, 50,000 rupees, in B, 1 lakh rupees, and in C, 50,000 rupees. So the NAV at the entry date for A was rupees 10.50, for B was rupees 10, and for C it was rupees 10 exactly. So The dividend received up to 31st of March 2004 for A amounts to rupees 950, for B amounts to rupees 1500. In case of C, there was nil. So by now, by 31st 3 2004, that Mr. A has already received the dividend in the form of its mutual fund securities for A as well as B. So now the NAV which is available as on 31st of March 2004 amounts to, for mutual fund A, rupees 10.4, for mutual fund B, rupees 10.10, and for mutual fund C amounts to rupees 9.80. For the question, we are supposed to provide them what is the effective yield on per annum basis in respect of each of these three schemes for Mr. A up to 31st 3 2004. So what's the kind of effective return, what's the kind of effective expectation, what's the effective yield per annum basis which he has been able to extract out of these three schemes. So let's understand about this question's solution now. So here's the solution for the same. Again, in the tabular presentation, just to ensure that you guys get the complete clarity with the question which is being asked in C final examination, try to present your paper in the same manner during your examination pattern as well. Just to incorporate these kind of features, we are assuming that you will be able to incorporate the same while your examinations as well, so that you can score the maximum number of marks and thereby keeping the good impression on the paper checker, right? So guys, for mutual fund A, the date of investment was 1/12/2003. For B, it was 1/1/2004. For C, it was 1/3/2004. The amount of investment was weighed 50,000, 1,50,000. NAV at the entry date was 10.50, 10 and 10. Dividend received up to 31st 3 2004 for mutual fund A, rupees 950. For mutual fund B, rupees 1500. For mutual fund C, it was nil. So the NAV on 31st of March 2004, which was available in the question, that was 10.4 for mutual fund A, 10.10 for mutual fund B, 9.80 for mutual fund C. So the number of units issued at the time when you first selected or went for this mutual fund option, you received the number of units as for 50,000 divided by 10.5 equals to 4762 units from mutual fund A. That was the number of units which were issued to Mr. A from mutual fund A. In case of mutual fund B, Mr. A received the number of units as 10,000 because he invested 1 lakh rupees in the same and the NAV during the entry date was 10. So he received 10,000 as mutual fund B's securities units. Now comes to mutual fund C. The number of units issued to him, Mr. A, was 5,000 rupees as he invested rupees 50,000 and he got 5,000 over there because the NAV at the entry date was 10 rupees. In such a case, the dividend per unit was 950 whole divided by number of units, that are 4762. So the dividend per unit will amount to 0.20. In case of mutual fund B, it will be 1500 divided by 10,000, that is the number of units. So we'll get the dividend per unit as 0.15 for mutual fund B, and in case of mutual fund C, there is no dividend, so nil. Now let's consider the cap gains which have been received per unit. So in case of mutual fund A, the closing NAV was 10.40. However, the initial opening NAV was 10.50. So in such a case, that was a minus side. We did got a negative kind of return as far as the capital gains are concerned. So that will be 10.40 minus 10.5. We'll get the figure of 0.10 negative. In case of mutual fund B, the initial NAV for the year was 10. However, the closing one was 10.10. In such a case, Mr. A did made a gain as far as the capital gains are concerned for mutual fund B of rupees 0.10. In case of mutual fund C, the initial NAV was 10 rupees. The closing NAV is rupees 9.80. In such a case, it's a loss to him, Mr. A, as far as the capital gains per unit is concerned. So he'll be having a loss, he'll be bearing or incurring the loss of rupees 0.20 per unit, that is 9.80 minus 10. So the overall return, as far as the overall return for Mr. A is concerned, for mutual fund A, that will amount to 0.10. We can simply add A and B in such a case. The same has been presented in the manner. Total of A and B, that will amount to 0.20 minus 0.10, that will total amounts to 0.10. For mutual fund B, that will amount to 0.15 plus 0.10 as the total 0.25. And in case of mutual fund C, that will amount to nil as far as the dividend is concerned, and in case of capital gains, that was a negative 0.0. So the overall net return for mutual fund C would be minus negative 0.20. So now if we'll just talk about the yield which Mr. A has been able to derive from all these three investments, we can simply say that the yield for mutual fund A would be the total amount of return, percentage of return, divided by the NAV which was available to him at the entry date at which he made the following investments. So we'll simply find out the yield as 0.10 divided by 10.5, that will amounts to 0.95% for mutual fund A. The same has to be multiplied with 12, dividing by the number of investments made. So since the investment was made for a period of 4 months, we'll have to calculate the annualized return, annualized yield per annum for that matter. So the number of yield, the yield percentage for 4 months was 0.95. So the same would be 2.85 in case we get the annualized yield. So that will be simply multiplied by 12 divided by 4. So in case of mutual fund B, we got the yield of percentage, that is 2.5%. We just had to divide 0.25 from amount of NAV which was available on entry date, that was 10. So we got the yield for 3 months as 2.5%. Annualized yield would be 10%. And in case of mutual fund C, that is the last one, we got the returns as 0.20 negative. We'll have to divide the same with the NAV which was available at the entry date, that is 10. So we'll get the figure of yield for 1 month, that is minus 2%. So in that case, the overall annualized return for annualized yield would be minus 24%. So guys, that's how this question has to be done in such a manner in order to provide the complete clarity to the paper checker as well. So that's how it can be solved it out. Let's move to the next question, and that is, this question was asked in CA final examination in November 2009. A mutual fund made an issue of 10 lakh units at rupees 10 each for on 01/01/2008. 1st January 2008, the issue was made of rupees 10 lakh units for 10 rupees each. No entry load was charged, so there is no expense as far as the entry load is concerned. It made the following investments. Particulars have been provided and the amount in rupees has also been provided in the same. So 50,000 equity shares of rupees 100 each at 160 rupees. So the amount spent on that investment was rupees 80 lakhs. Plus the mutual fund made an investment in 7% government securities, that is for rupees 8 lakh, and an investment in 9% debentures unlisted were for rupees 5 lakh. Plus there is another investment made on 10% debentures listed one for 5 lakhs. So overall, out of the 1 crore, 98 lakhs have been invested. During the year, the dividends of rupees 12 lakh were received on equity shares. Interest on all types of debt securities was received as and when due. That has been mentioned to us, provided to us in the question. At the end of the year, equity shares and 10% debentures are quoted at 175% and 90% respectively. Other investments were presently maintained at par. We are supposed to find out the NAV, that is the net asset value per unit, given the opening expenses paid during the year amounted to rupees 5 lakh. Also, we'll have to find out the NAV if the mutual fund had distributed as dividend of rupees 0.80 per unit during the year to the unit holders. So guys, this was the question which was asked in CA final examination November 2009. You'll just find out as to how this question can be solved in your examinations. We'll straightly head to the solution first. So we have the cash balance in the beginning, which was still pending. The initial investment amount was 1 crore. However, the investment in securities were made for just 98 lakhs. So we have the remaining cash balance in the beginning that amounts to rupees 2 lakh. Also, in the question, it was mentioned to us that the dividend will be received for rupees 12 lakhs. Plus, there was now, since we have already invested like 7% in the government securities for 5 lakh rupees, we'll be extracting the 7% interest on that. So that will amount to rupees 56,000, plus there will be an interest of 45,000 which will be available on 9% debentures. We have made the investment at rupees 5 lakh for the same, so we'll be getting an interest of 45,000 in that case. Plus there will be an interest on 10% debentures. We did invest at 5 lakh rupees on the same. We'll be extracting an interest of rupees 50,000. So the total subtotal which will be available in terms of our income in such a case would be 15 lakh and 51,000. That is the available cash flow still with us. We'll be deducting the operating expenses that is mentioned in the question for 5 lakh. We'll get the net balance at the end as rupees 10 lakh and 51,000. So guys, that is the cash balance, net cash balance that will be available to us at the end. So that will amount to 10 lakh 51,000. So now we'll have to straight move to calculation of NAV in such a case. So the available cash balance with us 10 lakh 51,000, plus there are 7% government securities which will be traded at par for rupees 8 lakh. Apart from that, we have the equity shares for 50,000 which are currently trading at a price of 175 rupees each. That will amount to 87 lakh and 50,000. Apart from that, we also have a 9% debentures unlisted at cost. So 5 lakh should be added for the same. Apart from that, we have 10% debentures. The same has been told to us in the question that the same are being presently undervalued at 90%. So they are not trading at par. The total amount for the same would be rupees 4,50,000. So the amount of total assets would be 1 crore 15 lakh and 51,000. The number of units which are being made available to us in the question 10 lakh. So the NAV per unit in such a case would be rupees 11.55. So now we are supposed and asked to calculate the NAV if in case the dividend of rupees 0.80 is paid. So we'll simply do one thing. We'll have the net assets. We'll be deducting the amount of dividend from that, and that will be rupees 8 lakh. We'll get the net assets figure in such a case, that will be rupees 1 crore 7 lakh and 51,000. We'll be dividing the same with the number of units available to us, that is 10 lakh. We'll get the NAV per unit, and that would amount to rupees 10.75. Perfect guys, that is how this question can be easily solved in such a manner, by using the tabular presentation, by writing it clearly and jotting down your points going for that shots well on time. So that's how this solution can be done. This question was asked in CA final examination for November 2009. So all these questions were asked in CA final examination. I hope you got the complete clarity as to how the questions which are being asked in CA final examination are really required to be solved in paper, and how the same should be presented in the best manner possible so as to extract the best number of marks, and that will help us in achieving good marks in CA final examination SFM, so that could help you in other subjects setting off and clearing as well. So I'll be concluding my video with a dose of motivation. Our greatest weakness lies in giving up. So this quote was presented with a person who never gave up in all during his life, Thomas Alva Edison. So it's been quoted us time and again. He was the person who tried his heart in inventing the bulb, how a bulb works. So he invented almost 10,000 ways in a bulb doesn't work. So that lies in itself, that how this great man never ever gave up while going for a good cause over that much time. Never in a person should have ever thought that we'll be getting some electricity kind of thing in our lives. So he was the first person who did give that thought. He was a real visionary in that sense. He was the first person who even thought about, okay, we'll be having electricity on this planet Earth. So that is such a nice quote which has been presented by this great gentleman. Our greatest weakness lies in giving up. That is how most people short of their dreams and desires and aspirations in their lives. Guys, think about one thing. You still need to go for many shots in your life. It's still young at our ages. We are respectively like almost 20, 25 at the most. And we have like started making this habit of like quitting time and again. Why? Why so? I mean, there is no need to quit. I mean, there is no need to give up so soon. We are still here. We are doing like preparing for like one of the best kind of course which is available in the world, that is CA final. So let's give it a best shot for that matter, right? So never ever try to give up. It's going to just loosen up your power. It's not going to empower you in any way. So you'll be feeling guilty day in day out if tomorrow you just think about leaving your C final or any kind of dream which you have already fixed up for yourself. Maybe not today, but certainly in the future, definitely you'll be thinking that way. So it's always good not to give up at the first instant. Try, 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 never surrender. Perfect, guys. So that is how my dose of motivation will be. Never ever give up. I'll be concluding my video with a thank you on behalf of Edipedia World. Keep connected, guys. Stay connected and keep interacting with us time and again. It really helps us in knowing your needs better. And certainly, I wish you all the way luck. All the goodness does come to your corner. It's been a festive week all throughout the time, and love you for that matter, guys. Stay connected. Take care. Bye.